Hey everyone, today we have the one and only Jeff Gibby. He's going to be doing a presentation on finding the right trading strategy for you. And I'm going to go ahead and just pass this over to you, Jeff. So you're good to go, you're live.
Sounds good. Thanks, Bobby. Good to hear from you. Thanks for the introduction. Welcome, everyone. I hope you're doing well. Thanks for coming to the video today. We've had a little bit of some market rattle lately. It's been kind of a fun start to the year, as always. Thanks for coming. I'll go ahead and get started. My name is Jeff Gibby. I've been here at MetaStock for 25 years this month, and it's been a great job, great place to work. Let's go ahead and kind of kick things off with a legal disclaimer. If you're joining us from either YouTube or from GoToWebinar, I do have the questions panels open, so make sure to ask any questions you have. If anything I talk about is unclear today, please let me know. So let's go ahead and start with this legal disclaimer, and we'll kind of go from there. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but it's rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So I hope you enjoyed that. Again, like I said at the very beginning, my name is Jeff Gibby. Just finished working here for, well, I guess I didn't finish working. I've been here for 25 years, started a couple decades ago, and I very much enjoy MetaStock. You can kind of read a little bit of the history. I'll kind of give you a big view. When I started 25 years ago, we were completely owned by Reuters. Later on, they became Thomson Reuters. Later, they became Refinitiv, and now they're owned by the London Stock Exchange. For me, I came on. We were part of Reuters, and they've changed names a few times, but they've always been very, very good. Well, they were good for us as owners, but they've also been very good partners. We bought ourselves back from Reuters when it was Thomson Reuters back in 2013, so it's going to be 9 years this year. But we've always had a really good relationship with Reuters, the people at Refinitiv, and kind of what they're doing and what they've been doing. And the advantage of that is, like, we do offer some of what I would say, well, number one, I'm completely biased, but not what I would call some of the best data in the world. The data that we have, that we get from Reuters, Refinitiv is the proper way to say that now, but we cover everything, like all of the global markets. There's over 300 exchanges we cover. It's information and news that's provided by literally the same places. The news and the data and the information that we give is literally the same thing that you'd get if you're a hedge fund subscribing to a super institutional service. So just remember that I can take off the headphones because I'm watching everything here. If you have questions, make sure you ask, but I'm just going to be a little bit more comfortable without the headphones on. So I started in inside sales. I worked in inside sales for about a decade. It was a really, really good job. I enjoyed talking to people about what they were trading and what they were doing with their trading, and particularly how they were wanting to change what they were doing. For the last 10, 15 years, I've actually been working with our partners. So I've worked with some of the greatest minds in the trading industry, people that I very, very much have respect for. So it's been a really, really good opportunity. I love the environment here at MetaStock. I don't kind of belabor the point too much, but just, I love the fact that the software that we have is supported very, very well. We actually have more people on our support desk than we have in sales and marketing put together. We just hired a couple more reps to help with kind of the questions and that kind of stuff. It's a great environment here. I like the culture. I love working with MetaStock, and so it's been a really, really good opportunity. I've learned a lot. I didn't know what a stock was when we started here, and I've had the chance to kind of really, really, trade with the software, meet a lot of people that really knew a lot more, and I've learned a lot. So it's been a good opportunity. That's going to be about how much we talk about MetaStock, but the last thing I'm going to talk about something that I'm very proud of, and we've won the Reader's Choice Award by Stocks and Commodities magazine 28 years in a row. So it's something I like to talk about. We're very, very proud of it. 28 years straight, it's been rated #1 by the readers, not the editors of Stocks and Commodities magazine. So there you go. That's about it in terms of what we're going to be talking about in terms of us. What I want to do really kind of right now is talk about, well, what we're going to talk about today. So today, the first thing, we'll spend a little bit of time talking about what trading plans. And I think trading plans are important. A lot of people will go into business and they'll have a perfect idea in terms of how their business is going to work. They're going to know what their product is. They're going to know what their costs are. They're going to know what their overhead is. And they'll go back and they'll be able to kind of look at that and they'll know exactly what they're going to be doing with their business plan, right? Or when you build a house, you have a plan. You know exactly where the walls are going to go and where the electrical goes and where the plumbing goes. What surprises me, even after 25 years, is how many people just, well, I'm going to go trade. They have no idea in terms of how they're going to trade, what the blueprints are going to be for trading. They're just going to go trade. And there's no excuse for not having a good trading plan in today's age. You should know what you're trading. And we'll talk a little bit more about that. I'm going to teach you a plan built on Gerald Appel's MACD. We're going to talk about how you can test trading ideas and see what works over time and see what works for you and with your drawdowns. And then I'll even talk a little bit about how the software can help you do scanning and things like that. Oh, and then we'll also do a special offer. Now, I want to talk a little bit about kind of my goal for today's event. And that's to kind of teach you something. I hope you learn something, at least about the MACD. But I also want to give you enough information about MetaStock that you're willing to do a trial on it. Okay, so with our trials, you basically can get an extended trial where you get 3 months to try it. My goal is to give go on and try it for 3 months. Okay, away as well. So thank you again for coming. Let's kind of talk a little bit about the importance of a trading plan. And I always like to start with this Richard Dennis book. And I really think that the story of the turtle trade is something that's very, very interesting. And I do have as much time as I want. We're going to stick to about an hour today. But I do want to talk about Richard Dennis and his friend Bill Eckhart, in case you're not familiar with the story. If you're not familiar with it, you can really read up on it on actually Wikipedia. If you just search for Richard Dennis, he'll pop up. And this is where I really pulled a lot of the information I'm going to give to you today in today's session. But Richard Dennis and Bill Eckhart, they were famous traders back in the 70s, 80s. Richard Dennis actually really, the way that the Wikipedia story goes, he started his trading career with about $1,600 of borrowed money and turned it into, I don't remember the exact number, and I didn't write it down, but well over $1 million. So traded futures markets back in the 70s. He had a feeling that you could teach anybody how to trade. He's like, what we actually do, if somebody has enough discipline and can follow instructions and do exactly what we tell him, we could teach people how to trade, and we'd be able to kind of, it's not something that requires special genetics or special risk tolerance or anything like that. It's something that we could actually teach people how to do. And his friend, business partner, I don't know kind of like what the relationship there was exactly, but a guy by the name of Bill Eckhart actually disagreed with him strongly. He felt like you couldn't teach people how to trade, like it wasn't a skill that you could actually adopt. And so that was the beginning of what they called the Turtle Traders experiment. And so what they did was they put out ads in, like, I think Wall Street Journal, Investors Business Daily, and they recruited people to come trade with them. And so initially they had 23 traders that they had actually kind of brought in. And this all happened back in 1984. So they bring in 23 traders. They basically spent 2 weeks training them. And after that 2-week period, they basically funded accounts for them. And the accounts ranged in size from anywhere from $250,000 to $2 million, depending on kind of, I don't know how much they liked them or how well they did in the training. I don't know what the qualifications are. And they kind of set up on this experiment with a turtle method is basically what's called in MetaStock. It does exist in MetaStock, but it was basically a breakout method. And with this experiment, they basically had really, really good success. They were able to take they were able to take their capital and turn it into $175 million over the course of about 5 years before they kind of shut down the experiment. So it was really, really kind of an interesting story. I think it's interesting since I told it well. But in any case, Richard Dennis was the original turtle trader. And one of the things that he kind of always talked about was discipline in trading. And this is one of the quotes. See, this is a long story for one side, but he said I could always say you could publish rules in a newspaper and nobody would follow them. The key to trading is consistency and discipline. Okay, and they did wash a few people out of the traders. They didn't keep everybody, but the people that actually did well are the people that actually had consistency and discipline. Well, back in the times before kind of the coronavirus and all that kind of stuff, we did do a lot of in-person seminars. And I would sit in those seminars and I'd ask people, what is the best profession for trading? And I'd wait for an answer. And sometimes I'll do that, but I'll just give it to you today. We'd always get guesses all over the place. And some of them were really good, like teacher or engineer or psychologist. And I find psychology is a pretty interesting answer because two of the people I have a lot of respect for in the industry, two people that we work for, are both psychologists. One's Dr. Alexander Elder, and the other is Jake Bernstein, and they both do psychology. So I think there's some truth to that answer. But the answer, according to kind of the article that I kind of read when we were putting together the thing, is actually the best profession for trading is an airline pilot. And I've always found that very, very interesting because why airline pilot? And I think it's discipline. When an airline pilot takes off, they're going to have a complete checklist. This is why they're going to take off the airplane. This is how much they're going to throttle the nose, the engines up. If I go further into this analogy, you're going to figure out that I'm not a pilot, but they're going to have exactly how much they're supposed to tilt the stick back. They're going to have a complete checklist. When they're landing, they're going to have a complete checklist. It's a very disciplined profession over and over and over again. They're going to do the same things. If there's an emergency, they have a checklist. They have something that they're supposed to follow. And that's why I think airline pilots is. And we do have a couple of experts that we work with that are very much ex-military pilots. Greg Morris, who is a guy that who is pretty retired now, but a great technician, wrote a couple of really good books, and actually managed a fund for Stadium Money that was in the billions of dollars. I can't remember exactly the amount, and it's not important. And also Chuck Hughes, airline pilot. He actually did a lot of, maybe not a military air pilot, we'll say it that way. So in any case, discipline is important. And we won't talk a lot about discipline, but I think also a key component, a lot more after this, I might kind of reference back to it. But I think one of the key things about discipline is also understanding why you're trading. One of the things that was really, really kind of cool about the way Richard did his turtle trading experiences, they had a plan. They knew exactly why they were buying. They were buying basically on a breakout system. They knew when they were going to get out if it got against them. They knew exactly how much they were allocating to capital, and they knew exactly when they would buy more. And the thing that was interesting about the turtle trading strategy, just in general, is that it actually lost money more than it made money. But because it would pyramid in and it would really kind of take advantage of when it was winning and cut the losses when it was losing, it was a very, very profitable trading methodology back in that day. So let's talk a little bit more. The next thing I want to talk about is kind of, I'm going to teach you how a methodology works. And I love technical analysis for a number of reasons, which we're going to kind of talk a little bit more about as we go. But one of the things that I like to kind of talk to you a little bit about is MACD. And the reason I like to talk about MACD, particularly in this class, is there's a lot of people that use MACD, but I think there's a lower percentage of people that actually understand MACD in the way Gerald intended it to be used and the way that he taught people how to use it. The other reason I like to actually kind of talk about MACD is it's extremely popular. People love MACD. One of our most popular videos up on our website right now is MACD. So I'm going to kind of basically talk a little bit about MACD. Well, I'm going to talk a lot about MACD. We're going to talk about how it's calculated, how you can read it, and 3 different ways you can kind of interpret the MACD indicator. So this is Gerald Appel. He's the inventor of the MACD. When we start to talk about MACD, there's 2 primary interpretations that we're going to talk about. The MACD is both a trend indicator and a momentum indicator. So in terms of a trend, it's going to help you identify whether a stock is bullish or bearish based on kind of its own internal rules, which I'm going to fully explain to you. But it also allows you to measure momentum. And I think that's key as well, because momentum also is a very, very good thing to look at. So when we're talking about trend, you know, I like trend following systems personally. And it's a very big cliche when you watch webinars or YouTube videos. The trend is your friend, befriend the trend, the rising tide will lift all boats. You know, it's very much a cliche. But this is trend. It will look at trend for you. It's very simple to understand when you read it. It will also look at momentum for you. So this is the end. We're going to spend some time out of PowerPoint right now because I'm going to go into the software and we're going to talk a little bit about MACD. So, okay. All right. So I've got MetaStock open. You should be able to see it here. What I'm going to do is we're just going to open up a chart. The chart that we're going to look at really doesn't matter for the purpose. In fact, if you have a symbol you want to look at, hey, Malia, thank you for coming. If you have a symbol you want to look at and you're very quick and you want to type it in, go ahead. We'll look at your stock. But you better be quick on the trigger because I'm not going to give it too much time. Okay. All right, yeah, I should have asked for it a little. Usually I'll ask for it a little bit earlier. If you do have symbols you'd like us to look at, we are going to test in a minute, so type them in and we'll look at them in just a second. So I think what we'll go with today is, let's just go with time. Of those lines. Okay. The other thing that I'm going to do is I'm going to add a couple moving averages to this chart. And the oh, no, okay. Bobby, come back if you need me. I thought I saw Bobby walking here, and he's running the control room. So if you need me, come back. All right. So I'm also going to add a couple of moving averages. This right here is what we call our indicator quick list. I'm going to show it to you real quick. It has a couple hundred indicators in here. So, and you can build your own indicators, but there are 200-300 indicators. I don't know. There's a lot of indicators. Everything is alphabetical. And one of the things that I like, are we up? Hold on just a sec.
Make sure you're sharing your screen. The GoToWebinar laptop lost internet and we don't have your screen anymore.
Oh, okay. So I know what that is. But yeah, okay. So we just have a little bit of an issue. Give me just 1 second. You will notice your screen goes blank. Okay. Now you guys should be able to see my screen in YouTube again too. All right, very good. I guess there was a bit of an internet glitch back there. So it happens. It's okay. We'll just keep going. Okay, let me see. Okay, so we're talking about the indicator quick list. We're talking about MACD. I'm just getting myself back on track here. I'm going to add a couple moving averages to this chart. So what we're going to do here is we're going to find in our indicator quick list the moving average. Again, if you've never used it, you'll just scroll down to the M's and you'll be able to find it. But if you've used it recently, it'll also be at the top of your list. So it does keep track of the indicators you're using. Just something that I actually really like that we added, I think, in like 16 or 15 or something. Anyway, I'm going to add a couple of these moving averages. We're going to add the moving average here. The first one that we're going to do is we're going to do a 12-period exponential moving average. So go ahead and click on OK here. And then the second one I'm going to do is, I think it's a 26. But let me check real quick. Okay, and you'll see that it'll help us. What I really want to do is actually just kind of verify it's 12 and 26 or 12 and 27. So let's go ahead and I've got the 12-period exponential moving average on here. I'm going to add it again to the chart and make it a 26-period exponential moving average. So go ahead and 26, go ahead and make it exponential. And I'm just going to change the color to it. I'm going to basically make it a line. I'm going to make it blue so it stands out from the other one. And make it a little thicker so you can see it. Go ahead and click on OK. One of the things I want to say about MetaStock as we're navigating things is it's very much functions like a Windows program or Windows product. So if I want to make some changes to the chart, like I want to make this other red moving average a little bit thicker too, I can just double click on it. It'll open up the property dialog box. We've spent a lot of time trying to make this function exactly like the other Windows applications that you have. So you're not, one of the things that's always been important, even from the very early days, is how can we make the program so that you can focus on Apple or the stock or the future or whatever it is you're looking at and not focus on kind of like, how do I add an indicator? Everything is drag and drop, it's click and pick, it's very, very, we put a lot of thought into kind of how the UI should work with this. So I'm gonna go ahead and apply that. I didn't make it as thick as I want. Again, I'm gonna double click it. We're just gonna go ahead and make it a little bit thicker. I want you to be able to clearly see those lines, okay? And then we'll talk a little bit. I'm gonna zoom in. And what I'm gonna do is I'll just click on the zoom button here. I'm gonna zoom in pretty close right now, just so that we can kind of focus in on the lines that are on here and I can talk to you about what a MACD is. So right here, we've got the 12 and the 26 period exponential moving average plotted on the chart. If I wanted to calculate the MACD value or the core MACD value, all I would do was actually subtract the 12-period exponential from the 26-period exponential. And that would give us this red line here. So ignore all the other red lines. If we're just looking at the red line here, that is the difference between a shorter period moving average and a longer period moving average, okay? And that kind of just tells us quite a bit. That's all it is. If the stock is going up dramatically like it was here in this period, your shorter period moving average is going to move away from that longer period moving average. It's going to give you a positive number. And the faster that's moving away, the bigger that number is. So when you're in an uptrend, typically this red line is going to be above the blue line because the price is moving up. If it's moving very, very quickly, it's going to be further above because that price is moving up faster, okay? If you're kind of in a stagnant area, like right here, for example, you'll see that your MACD values will still be positive or negative, but it's going to be a shallower MACD because it's showing you that the market is more flat, okay? If we're in a downtrend and the price of the stock is moving down for a sustained period, like let's say right here, the moving averages are going to cross, you're going to start to get a negative value, and that'll be reflected in the MACD. And just to be clear, the line that I'm talking about when I say MACD is the red line. Okay, so the not the dotted line, not the histogram, the red line. Okay, that's it. That's the calculation of the MACD. And just by understanding how that works, you can see, okay, well, right here we were very, very strong up. Right now we're a bit flat, maybe drifting a bit downwards because we have more below zero, but you kind of get an understanding of where the stock is and how fast it's getting there, how fast it's moving on, whatever, the freeway, whatever. So that's the first part of the MACD, or the first line that we'll talk about the MACD. The second line is what Gerald calls the signal line, okay? I'm going to zoom back in again just so you can kind of get a clear idea of exactly what line I'm talking about. But the line that I'm going to talk about is this blue dotted line, okay? Gerald calls that the signal line. Okay, and the only thing that is it's a 9 exponential moving average of the difference here. So it's a 9 exponential moving average of the MACD. So the MACD is the red line. The signal line is the 9-period exponential moving average, the blue line. Okay. Joe calls it a signal line because he basically engineered it to be a signal that the stock was getting bullish or bearish. Like, so for example, if right here, you notice that the MACD line, the red line, goes above the blue line, that's a bullish, the MACD is entering a bullish phase there, okay? And so like if we wanted to draw that on the chart, we'd say, okay, right here we're going from below to above, okay? And that means that we're in a bullish phase on the MACD. When it comes back down below, so we would just follow this here, you see right here it crosses down below the signal line. Right here, that's when the MACD enters a bearish phase. It stays in that bearish phase until it crosses back above that signal line. It doesn't look like that cross happened here, although it got close. Here is when we crossed back into our bullish phase, right here, okay? So that's why he calls it a signal line. At this point, the stock should be going up. It's giving us a bullish signal, okay? At this point, the stock is starting to weaken. It didn't go down very much, but it did go down, and this is where the MACD entered a bearish phase, okay? Right here, we went into bullish, and we could kind of continue to draw the lines here. Right here, it went into a bearish phase, okay? And you can read that as a signal, and you can even trade on that. That's the first way you interpret the MACD. But before I kind of talk a little bit about that, I do want to just tell you what the third line is. So the third line is was popularized by Linda Radke. She also did a bunch of work on the MACD. And the only thing it is it's a difference between the red line and the blue line. So you can even just look at it. If it goes below 0, you know there's been a crossover. If it goes up above 0, you know there's been a crossover, because it's just subtracting the red line from the blue line. That's all it is. It's measuring that difference. So you can have it, you can not have it on the chart. I do prefer to have it on the chart. I like to be able to see that. It's up to you. It really is. I do prefer, and this is a popular way people look at the MACD. Okay. I hope that's helpful. I hope you've learned something already, maybe. All right. So let's kind of get back into kind of the nuts and bolts of this. If I'm looking at this from a perspective of crossovers, we had a crossover of the MACD here, and we had a cross back under here, okay? And I actually there's a tool in MetaStock. Let me go ahead and we'll get to it right here. You see the crossover here, the cross under. There's a tool in MetaStock that will actually automatically label this for us and tell us what it means. And so I'm gonna, instead of actually, now that I've drawn all the horizontal lines on there, I'm just gonna show you how that works. We call it Expert Advisor, okay? I'm gonna go ahead and click on it, and it will load up all of the Expert Advisors. So what I wanna talk about when it comes to expert advisors, there's a lot of experts that are built in here that I like to show people. We'll only talk about MACD today, but in MetaStock, there's probably about 100. We just added another 54 with our latest upgrade, but there's probably well over 100 systems. I think it's 120, but don't quote me on that. Systems that are built into MetaStock. So there's really cool ones that I like to show that identify candlestick patterns and explain what they mean. There's stuff that's built around stochastics. There's stuff that's built around volume. There are a number of different patterns that are just designed. This Expert Advisor, what it's designed to do is help you analyze a chart. So if I attach this MACD by MetaStock, I'll go ahead and attach that to the chart here and close it. Everywhere I've drawn on that chart where there is a buy or a sell line, it's going to actually say there's a MACD buy signal, or there's a MACD sell signal, or here's a MACD buy signal, or a sell signal, okay? It'll also give me a ribbon. So right here, you see down at the bottom, MACD is bullish here, it's bearish here, it's bullish here, it's bearish here, it's bullish here, and so on. So it helps me identify where it is in relationship to the signal line. And it can do that because one of the reasons I like technical analysis is it's extremely objective. So if you understood what I was talking about when we talked about MACD and the signal line, you'll be able to see on any chart, you don't have to have MetaStock for this, you'll be able to see where a MACD buy signal came in. You'll be able to see where a MACD sell signal came in because it's very, very straightforward. It's objective. It's not subjective. And that's why I like technical analysis in general. Because at no point am I going to say, well, you know, we had this virus and then market's going down. or there's been a little bit of, let's say, an invasion overseas right now, and right now the market's going down, they did the stimulus relief, which did have impacts on the market, right? Were they the impacts that you would have expected exactly? Were you able to measure that? Or the reason I like technical analysis is we're not trying to make guesses. And before the coronavirus, it was quantitative easing and housing crisis, and pick whatever kind of crisis that you want. Technical analysis, very, very simply, is the study of trend and charts. And by definition, this is all very objective. We should be able to come to the same conclusion looking at the same chart and using the same indicators. In other words, you can see there was a buy signal here, right? You can see where that buy signal came in. It came in at, I'm trying to get to the price here, roughly 150, right? We would have got our sell signal roughly at about 160. So that was a good trade for us, right? This one, we would have, if we went short here because we were getting a MACD signal, we would have gone short here at 170-ish and got long again here at 170-ish. That wasn't a very good trade. We can see that though. And not all the trades are going to work out. What I want to do is find stuff that works. I'm getting a little bit ahead of myself though, because there's 3 things I want to teach you about MACD before we start talking about and analyzing signals. So the first one is that signal line, and I do love it. It's easy to identify on a chart. It's objective. And once you understand how MACD is, you're just comparing a bunch of exponential moving averages, right? And seeing what they're doing. Okay. The second way that you can use MACD is overbought or oversold. Remember, I told you that you could use it as overbought, oversold. And MetaStock can help us with it there. I want to point out these 2 bars here. This red bar and this red bar. They stand out because they're red. The rest of the bars are all black, right? The reason that they're red is the expert advisor is actually pointing out something about this particular price right here. Go ahead and put a big old circle around these 2, right? It's pointing out, the expert advisor is pointing out something about these particular prices. And what is pointing out, I can actually show you, or I can show you how to find that out. So if I come into the expert commentary, this is another tool that's part of the expert advisor that helps us understand what's going on a chart. Right here, you'll see that there's a black arrow, and it's just giving us a MACD analysis of right now. What's going on in Apple right now, okay? I'm going to move this arrow back, this triangle, to right here. So let's go ahead and move it right there. Now it's right above that, because I want to show you why it's painting that bar red. But I also want you to understand how to look at this commentary on different days. So now that I've moved this bar back, this commentary right here is ignoring all of this information here, and it's just focusing on this current day and the day before, okay? Actually, just that day. But I could also look at the day before, okay? So here it's going to say, and I'm going to make this a little bit bigger, and you're going to read along with me in the book. But it says the MACD can provide buy-sell indications in 3 ways. There's the crossover. That's the buy and sell signals that we were talking about. And currently, if we're reading this and we're just ignoring all the data, we're just looking at the chart up to this point, currently the MACD is bullish since it's trading above its signal line. The MACD crossed above its signal line 17 days ago. Okay, since then it's increased about 15%. Not too bad for 17 days. I'll take that every trade. I don't get that every trade, but that's a good return so far. And it's a trade that you like to have in your account. Right here, it's saying right now the MACD is in an overbought range. That's why it's red. So you notice it also highlights overbought right there for you, so you know that that's what it's talking about. And this is important because prices may continue. And I like the way they worded this, because if you've ever looked at overbought, oversold indicators, you'll understand that they can stay overbought or oversold for a long time, right? Like they'll just because they're overbought, there is a reversion to the mean that definitely happens in trading, but sometimes it just keeps going, and you're like, well, certainly this is going to retrace a little bit, but not always. In fact, a trend can just stay in a trend for a lot longer than you can remain solvent betting against it, right? So what it's saying here is, be careful. Prices may continue to move higher for some time. Wait for prices to move lower before you consider any short positions or even exit the trade. So if I'm reading this and I'm in a long trade because of this MACD buy signal, I might consider moving a stop. Okay, I might consider looking at the latest pivot low, which is how I love to actually. I like to look at pivot lows, which is just a low surrounded by two higher lows. Like this is a pivot low here, and maybe put a stop in there. But until I actually get a signal that the market's going to go down, or maybe I get a sell signal a couple of days later from the MACD, until that happens, I don't want to trade just because I'm getting an overbought, oversold reading. Okay. And then that's the second way, but though you can use MACD. When it starts to get stretched, you need to start to worry about whether you're overbought or oversold. Okay. The third way, and we won't cover this in a huge amount of detail, but I am going to cover it because I actually mentioned his name already. One of my favorite technicians, one of the people that I have a lot of respect for, is a gentleman by the name of Dr. Alexander Elder. He's great. Like I always like to have him on because I always find what he has to say very interesting in our webinars. In fact, like if you're on YouTube right now on our channel, maybe you should go watch the last one. He just is a really, really good technician. Always invited in here. He calls MACD divergence the most powerful signal in all of technical analysis. So I'm going to show you kind of how you would look for divergence. I don't see it on this particular chart, but I do want you to understand how to look for it. What I'm going to look for, the way Dr. Elder teaches it, is I'm going to look for a peak in MACD price, followed by a cross down below MACD price, followed up by a peak in MACD price. So right here we had, to say that in a different way, because I think I might have confused the way that I said, here's a peak of MACD, right? We did have a subsequent cross below zero. This is very important, the way Dr. Elder looks for them. And then we have a subsequent peak in price right here, okay? And right here, you'll notice that it went down about 84% MACD from this peak to this peak over about 38 days, okay? So it's headed down. Definitely this peak is lower than this peak. Everybody can agree that. Okay, if I take a corresponding trend line and draw here where that happened, you'll notice that this also dropped. It was about 3%. The price went from this peak to this peak, from this peak to this peak was about 3%. Okay, both of these trend lines are headed down. That's not what we would consider a divergence at all. Now, if we had a divergence, we'd be looking for something like this, where this was going up and this is going down. That would be either a bullish or bearish divergence, depending on which direction it was breaking. And the reason I kind of go into a lot of detail on that is, again, Dr. Alexander Elder calls that the most powerful signal in all of technical analysis. So, but in this particular case, let me go ahead and delete the lines on the chart here. In this particular case, there have been no divergence values within the last 5 days. So there wasn't a divergence. It does kind of keep an eye open for that. It is something that you can scan for, but there's no divergence within the last 5 days. So there's the 3 ways you look at MACD. I hope you learned something too. Matt says, who was the technician that Jeff mentioned? Well, try and remember all of them. But there was Dr. Alexander Elder is the one I just mentioned. Before that, I also talked a little bit about Greg Morris, who did a lot of work on candlesticks. There was also Jake Bernstein and Chuck Hughes. I think those are the only names I've dropped so far. And then to answer your other question, youtube.com/MetaStock is our YouTube channel. If you're watching the GoToWebinar, we will send you a recording of today's webinar automatically. If you're not a member of it, we do a lot of really cool stuff on YouTube. Like and subscribe. It helps a great deal. We appreciate it. Thank you for the questions, Matt. Okay. All right. So let's kind of just sum up a little bit. Things I like about technical analysis is this is very objective. In other words, we'd all get the same reading. We'd all know this is a buy signal and a sell signal. Does it work all the time? No. Since it's objective, can we measure it? Do we know how well it works? Yeah, absolutely. We can all get the same signals off of MACD. And the questions that I would have is this a system that works well for Apple, which is a system that we randomly pulled up this morning because I felt like it? Or are there systems that work better? Are there other indicators that work better? And this is kind of a mistake that I would make early on as a sales guy. You know, MetaStock is a tool that we've been developing for like 30 years, right? Like it's been in the oven for a while, and we just keep adding things and adding methodologies and stuff like that. And as a new trader, you know, if I said to you, here's a tool that has like 300 indicators in it and over 100 trading methodologies that you can test and explorations and just all kinds of functionality, the real kickback that I would get when I would work on phone is like, I just don't have that much knowledge. I know maybe what I've heard of MACD, but I don't know about it. But hopefully I fix that for you today. But like, we've spent a good 40 minutes on MACD right now, and we just learned MACD, that's it. And I talked a little bit about Turtle, so maybe 30 minutes, right? What I would want to do as a trader is, since this is all objective and not subjective, I can use discipline with it, I can follow the signals, but I want to be able to evaluate how this works. Because if I love Gerald Appel, but if Apple doesn't work on the stock that I'm trading, and Apple in this hypothetical, why do I care? I want to be able to focus on the indicators or the methods that work and ignore the stuff that doesn't, right? And so what we do have in MetaStock that is very, very helpful is the ability to automatically test this. I've got the buy-sell signals here. I just told you this was a 15% increase, right? But let's have the software tell us what works best, and then I can learn about the systems that work best instead of focusing time and energy on stuff that may be suboptimal or not even work at all. Let's focus on what works. Let's focus on what's worked the last several years. And by doing that, we're going to be we're not necessarily going to be successful, because like, it's going to be an interesting year. But I'll tell you, last year was also an interesting year, and the year before that was even more interesting. So you're always going to have things that kind of move the market around. What I want to be able to do is understand how a method works over time. And to do that, I can test all of these. I can test all of the systems that are in MetaStock. Let's do a system test. Let's find out what worked best on Apple, and we'll throw a couple other stocks in there as well. So we're going to go back into the Power Console. We're going to, there's a couple of things in here that this is a quote list. It does a really good job if you want to just see a list of stocks and how they changed today. This is a scanner. We'll talk a little bit more about this. Looking at the time, I'm probably going to go, I'm going to say maybe 10 minutes late today. I'm going to go a little bit quicker, but I am kind of running behind on time. And since we don't have any buttoned up webinars, just bear with me. We'll get through it. The system tester is where we're going to go. So this is with this, I can test trading ideas. In MetaStock, there's a ton of different trading ideas that we can use. I'm going to purposely select a couple groups that we'll run a test against. We also have a forecaster, which is patented. It does a lot of statistical analysis. I'd show you how to use that, but it's a subject of a whole nother hour. So it is a very, very cool tool in MetaStock. And then there's also an options viewer that allows you to look at options and do profit over time strategies. It does a really good job. So, but for today, let's talk a little bit about system testing, because with this, I have the ability to go in and test a whole bunch of trading ideas and figure out what works. And what I'm going to do is I'm going to actually build I don't have a list in here, but what I'm going to do is build a list of systems real quick. So I know that all the ACT systems are included in MetaStock. The ACT stuff was based on the work of John Ehlers. John wrote a bunch of, he wrote Rocket Science for Traders. I'm going to add these to the favorites. So add selected system test to favorites. And he's a very, very well-known technician. I'm going to add the PS systems. So I'm just going to go ahead and do a search for performance systems here. I'm going to add all of those systems to our backtest. So these are 81 new systems I'm going to add to favorites right now. And normally I'll have this done. This is a new installation of MetaStock. And so, you know, that's why I'm just kind of building out a favorites list. And then I want to also, I'll go ahead and clear this search out right here. I'll make sure I have those in favorites. I also want to include, there's a few of them. What I'm specifically, let me tell you why I'm excluding a few of the systems that are built in. You can create your own systems. I want to make sure I exclude those. You can also, I'm going to do stochastic pops here too. Test using optimization, and that takes a little bit longer. I want to test systems that I know are included in MetaStock, but but also that don't require optimization. So that's okay. We'll kind of go ahead and add this to favorites. Oh, it might already be in there. Okay. All right. Well, I'm searching favorites. That's why I'm finding. Okay, cool. Let's see. Let's do the MACD system too, because that's the one we're talking about. So let me go ahead and add that to favorites. So I think there's over about 80 or so systems in or there's well over 100 pre-built methodologies for you. Based on the rules that I'm going to kind of put together, this is about 90 systems that we're going to test against. 54 of these we just added with our MetaStock 18 as well. So what we're going to do, I'm not sure, Nielsen, and VUM today, I'm not sure what you're saying there. If you want to rephrase it, maybe you could. In any case, okay. So we're going to take these, what was the number? 89 systems. We're going to test them against Apple. And then also, I want you to know, also before I run this system test, you can test this against index constituents. You can do whole exchanges. You could test it against all of the optionable stocks. You could test it against every stock. If you're joining us or you're watching this video from London and you want to do London stocks, you can literally do just about anything that you want with the data that we offer and the coverage that we offer. I am going to limit it to a few stocks today just because the more stocks I throw into this, the more time it's going to take. And I'm already a little bit over time anyway. So what I'm going to do is I'm just going to add Apple. We'll do Tesla because that's another one that's very popular. We'll do Facebook, which had a bit of an incident lately. Let's just call it an incident. We'll do DIA, SPY. That's okay. We'll leave it at that. 1, 2, 3, 4. So we're going to do these 5 stocks. Again, I could do thousands. I could do hundreds. You could do whatever you want. For the purpose of just showing it to you today, we do these 5 stocks. Okay. I'm going to test it against these 90 trading methodologies, including the MACD, which we just spent extensive time on. And I'm going to have it take every long trade and every short trade, so both long and short trades, going back about 500 records on a daily basis. On a daily basis, 5 records will be about 5 years. No. 2 years. That's a terrible math right there. 2 years on a daily basis. There's about 250 or 2 days a year. So we're going to go about 500 daily bars. Now, you can, if you're doing US stocks, you can go back to the 1980s if you want. If you are doing futures, you can go back to the 73, 74, somewhere in there. If you're doing international, usually the data that's available is about 10 years on a daily basis. And if you're doing intraday, you can usually do about a year or 2. Okay. The point is you can do a lot of, like some people that I talk to, they go, well, I think we're entering a bearish market and I want to go back to where we crashed back maybe in the Rona times or the housing crisis, or, every 10 years, it seems like we have some sort of a crisis. Maybe those are the regions that you want to test. You can do that. You can just basically set exactly what time frame you want to do. I'm just going to do the last 500. Okay. Under trade options, when it takes a trade, we'll just kind of cover this real briefly. I'm going to have it start with $10,000. I could have it trade 50 shares every time it gets a trade, or based on a certain cost that I give it, or I'm going to have it do percent of available equity. So we'll start with $10,000, and then the first time it trades, it's going to trade half. So 5,000. If it grows it to 20,000, your trades will be half of that, or 10,000. So in terms of the broker, I'm not going to put any commissions or interest rates or margin. I'm going to just leave that out of the calculation. Most people in the US aren't paying commissions per se on their trades anyway. And on trade execution, I'm going to leave that on what's called realistic market prices. And to just explain to you what that means, if I get, in the case of MACD, if I get a MACD crossover and it gives me a buy signal, it's going to assume that happened sometime during that bar. But if you ever watch real-time daily bars, you might get a buy signal from a MACD cross, but then people get back from lunch and they are way more bearish than they were in the morning, and so the price goes down and no cross ever happens when you look at the finished daily bar. That happens a lot, and so like a lot of times what I will do is make decisions at the end of the day or after market for the next day. What we put as realistic market price is it waits till the bar closes and it buys at the beginning of the open. Okay, you can't change that. Like if you want, like for me, I look at the market at 145 here in Utah, and I make all my decisions by the time the market closes, and usually that's enough time with MetaStock to go through every stock that I'm interested in, look at my portfolio, and make every decision I want to make. I'm really, really good at doing that in 15 to 20 minutes. So if I wanted to test on based on just doing everything at the close, which is what I do, I could take that realistic out and just have it buy or sell on the close. So I'm going to have it buy, use the realistic or the default method. We're going to go ahead and click OK. We've got 90 systems selected. We have 5 stocks. It's going to do 450 system tests. I'm just going to have it go. 445. That's close. So now what it's doing is it's actually going through, and right now it's testing annual strength and weakness, fractals, all of those methodologies. It's going back 2 years, and it's doing it for those 5 stocks that I selected. So in the matter of just a couple seconds, it's going to go in and give me a profit and loss value as if it had taken every single trade out of those 445 tests. And the way that we look at that, if I click on results, is this right here. Okay, so this is the summary. Okay, and so what I want to do, again, what I want to focus on is the indicators that work. Okay, and so from an aggregate, from a net, we tested 5 stocks. So this is an average is what we're looking at. These is how well the systems did. Okay, so green is good. Those are systems that made money for the last 2 years. And red is bad. Those are systems that lost money for the last 2 years. Okay, what I'm going to do is I'm going to sort this based on the average net profit. And you can see immediately that as a trader, what I want to be able to do is focus on what works and what works best. And I'm going to say that what works best is the biggest equation. I'll talk a bit more about that as we start talking about the numbers. If I wouldn't have any interest in learning about these indicators. If I'm trading Apple or those stocks, they underperformed last year. They would have left me negative. I wonder where Bollinger Band is on this list. And I'm sure it is on here. I don't see it. So in this particular case, our best performing system was the Arun reversal. Our second best was the fractal trading system. Our third best was the Mama Fama system. This is one of the starts with ACT. Remember, that was the work of John Ehlers. Okay, and I have average numbers to kind of see how well it worked. Okay, so our Arun reversal system made 107%, whereas over 2 years, fractal trading system made 67%, and our Mama Fama made 66%. Okay, I can see what our best profit was. So $48,000, starting with $10,000. That ain't too bad. That isn't too bad. Tried to not use ain't and just got even worse at my vocabulary right there. Our lowest loss, our worst profit was 21 cents. So even in the worst case scenario on our basket, that made money. And it made about 6 trades in 2 years. Okay, actually, this is looking pretty good. We'll probably drill into this. But what I do kind of want to see here, this initial level, how much money did it make? What was the best and worst? And how often is it trading? Because for this, like 6 trades, 2 years, that's about 3 trades a year. You know, I don't want something that's overly aggressive, because for me, I just told you I spend 15 minutes a day trading, right? Like, I don't have time to trade 150 times per stock. You know, if I was had a number like this, even if this exponential moving average system worked, it isn't fit for me. I don't have any desire to trade 190 times over 2 years. No, thank you. We'll pass. This reversal system, though, does look really good. The fractal trading system too always works really well. I often talk about that. And the Mama Fama, those are the ones that I want to focus on. Even Bollinger Bands, I'm sure it was profitable last year on these 5 stocks, but why would I be interested in following those when they're underperforming other systems I could be learning about, right? And Bollinger Bands are great. They might work really good in other circumstances or on other things. But in this case, if I'm spending time learning about a system, it's going to be one of these top 3 or 4. And I'm going to be looking at other things. So let's go ahead and look at the Arun reversal right here. just because it did perform really, really well. I'm going to go ahead and click on View. Okay. And then it's going to break it down by stock for us. So we did about 5 stocks. And the reason that this performed really well on those 5 stocks is because it performed exceptionally well on Tesla. You can see that in Tesla, it made 4 trades and made 480%. I'm just going to sort this also by net profit. Okay. So we're going to see that maybe this is a bit of an outlier. Worked really well on Tesla. Comparatively, the Facebook, Apple, Dow, S&P, they still were positive, but they weren't that positive. So I'm going to kick this one out as maybe being an outlier, and we'll look at the fractal trading system as a second option. Let's go ahead and take a look at that. Okay, actually still worked really well on Tesla, and maybe it just worked really well on Tesla. It still worked on Apple. Oh, it doesn't. Yeah. Okay. Anyway, let's sort it by percent gain. Tesla obviously was still an incredible winner. Not quite as good as the Arun reversal. More trades. I'm going back. I made a different decision. I'm going to go back to that Arun reversal just based on that. And these are numbers I can make decisions on very, very quickly. Okay. Why would I want to trade that when I can trade less and make more money, right? So let's just kind of look at this in a Tesla scenario. Okay. On Tesla, if we would have traded about 2 years, it started in 311 and ran to 33, 2020 to 2022, made 480%, 4 trades, 4 wins, 0 losses. No average percent loss gain because it didn't have any losses. I do like having some losses because I want to know, I know every system is going to fail eventually. I want to know what that failure is going to look like, because if this is 480%, but I lose it all on one loser, that's not very good. So in that type of a scenario, I'd go back further in time and test more Tesla data, right? But this is just to kind of give you an idea of how it works. I'm going to go ahead and click on the view here. I'm going to get a full report. I'm not going to read this report to you because, well, it's boring a little bit, but I'll show you kind of some of the things that I want to do. And I do want to, again, mention that the help file is very helpful. If you have any questions about any of the numbers, even if we don't talk about them, you can click on help and everything is really, really well documented. All of the indicators are documented. It's a great reference. If you even just want to know how a MACD is calculated, you can easily find that stuff in the help files. But this will tell you how all of the numbers are calculated and what they mean. I'm just going to show a couple of them that I generally look at. One is my profitable trades and my most consecutive. Now, I don't really care about most consecutive as much when it comes to profitable trades as it comes to unprofitable trades. Like I can win psychologically every time and still stay disciplined. So that might not be true for you, right? But like for me, losing is way harder than winning, right? If and we didn't have any losers in here, but I do want losers. I do want a few of them. And so you could go back and test since Tesla started if you wanted. But what I want to see is how many times when it loses, how many losses are in a row, and what the average value of that loss is. So those are 2 numbers I look at. These profitable, you know, if the average profit, this looks really good for average profit. This looks really good for most consecutive wins in a row. But the losing numbers are so much more valuable to me because they give me an idea, well, this thing might lose 6 times in a row and I'll still make money like the turtles did. But I want to know that going in. And this way, by testing in advance, you can kind of get an idea. It's not perfect, but it helps us understand kind of our system and how it works, okay? If we would have bought and held on to, okay, so looking at the profit levels here, we made 480%. If we would have bought Tesla and just held on to it, we would have only made 242%, meaning we outperformed buy and hold by about 67%. And I think that's cool. That's good. I'd like to look at the profit loss index and the risk reward risk. Since we didn't have any losses, those are going to be pinned at 100%. You want losses in there. I'd retest this and see what the losses are. But any number, it goes from minus 100 to plus 100. So any number that's close to 100 or above 80 or 70 is good. 100 is obviously too good because we want some losses in this thing. We want to understand. You want to understand how this works because the biggest thing is discipline. and you want to understand kind of what your business model looks like when you have losers, because you will in trading. They happen, even to me. Okay. The other thing I like to look at, there's other things in here, but I'm going to kind of, just for the purpose of time and kind of letting you get to lunch or whatever you're doing today, we'll go ahead and I'll show you the last thing that I like to look at, and this is the equity curve. I like to look at the equity curve because, again, I want to understand the system. If we have something that's fairly, fairly steady, as it is right here, it's fairly steady, I'm going to be more comfortable with it. Looks like it has had some losers. Here's our biggest drawdown is from here to here, which is concerning to me, but not enough. What I'm really kind of trying to avoid is plus 100,000, minus 100,000. That's more of a roller coaster than I would like to take in my trading. One of the favorite sayings in trading that I've heard over the years is there's old traders and there's bull traders, but there aren't any old bull traders. I kind of like things to not keep me up, if you know what I mean. I generally, I'd adopt a strategy where you have something that's consistent over time, and not something like, oh man, I'm going to have no money left if this goes against me. This is something that's consistent. It looks okay. It passes that smell test for me, if you know what I mean. So I'm going to go ahead and plot it on the chart. So if I hit plot on chart right here, it's going to go ahead and plot it on the chart for us. And we'll go ahead and just close this down and close this down. And what you're going to have right here is this is that same equity curve. You can see where the buy came in. You had a buy right here. You sold that buy here. Okay. You also went short. You sold that short here. You buy. You kind of get the idea. Looks like this would have been a bit of a short. This is that same equity curve that we were talking about before. Okay. I'm going to zoom in a little bit just so we can see a little bit more about what's going on here. And so right here, we would have had a really good trade. Okay. And again, it does tell me right here, this is the Arun reversal equity. So at this point, if I like it, and it does look good on Tesla, I want to learn more about this particular methodology. Again, I want you to use this as a tool that helps you shortcut your education process, but not bypass it. And the reason I say that is I think it goes back to discipline. If you understand why you're taking a trade, you understand where that system is and what indicators it's using, I think it's going to help you stay upon that discipline approach. So for me, my recommendation is, okay, we're going to look a little bit more into this Arun system. What is it? And the perfect tool for that is we're going to go back to the expert advisor. We're going to attach that to the chart, and it's going to tell us what it is. So I'm going to go ahead and click on the expert advisor here. We're going to navigate to that Arun system. Okay. Arun reversal. Yep, that's the same one. We'll go ahead and attach it and close. And now it's going to highlight the bars green based on every time it's in a long trade, red when it's in a short trade. And the expert commentary is kind of off to the right margin here. What I'm going to do is actually move it to this buy signal, and we'll look at it as if we were looking at this buy signal. Okay. And it's going to tell us if, I'm going to make this bigger so you can read along with me again. I know you guys like to do that. If you're trading off short position, exit them. Get long either with a market on close order or tomorrow's open. Okay. The Arun indicator was originally created by Tushar Shandy. Okay. And it's a means of identifying impending trending action or impending trading action. The system enters when the two Arun indicators are extremes from each other. This is the signal for trending action. The system exits when there's a reverse of these conditions. So at this point, I kind of have an idea of where this comes from. I could go and look at the Complete Technical Trader. Ding, I know, or his other book, which is, I can only remember one right now. I could get those books. I could read about them. They're good books, very, very popular. The New Technical Trader he wrote with Stanley Kroll. And then the other one, I don't remember what it's named, but he wrote independently. But he's a very, we're actually having him in for a webinar next week. Actually, he's a really, really good technician. So it was created by Tushar Shandy. You could put the other thing you could do is you could add the Arun indicators to the chart, take a look at them, see when the buy and sells are firing. You could go into the help file about the Arun indicators. They'll tell you how they're calculated, how to interpret them, all that kind of stuff. There's a lot of education you can do for yourself without even getting out of MetaStock. It's such a good tool, especially if you're learning about technical analysis, if you're new to technical analysis, because We just figured out this works really well for Tesla, or at least it did the last 2 years, right? Now we can figure out what indicators it's using, and then we can add those indicators to the chart and then learn even more about it. And then when you're really, really comfortable with it, yeah, if it's making money, if it was profitable the last couple of years, this is the whole idea, is to get to a trading point. But let's make sure we're comfortable with our business plan or our house plan or whatever, whichever of those analogies that you like the most at the start of it. So there you go. The other thing I'm going to show you real quick, and we'll kind of wrap this up within a few minutes here, is scanning. One of the reasons I'm able to kind of go in and trade and kind of keep that limited to 10 or 15 minutes a day is because of scanning. I'll come in here every day, and let's say that you really do like that Tushar-Shandy Arun oscillator system. Let's say that's something that you want to start trading with because you've done the research, not because I told you it's good. Don't listen to me. You want to make sure it's good for you. Let's say that you found that system to be something that you like. You want to find opportunities in the market. You can very easily. I'm back in the power comps. I clicked on the scanner. And what I'm going to do is right here, we're going to come down to those PS systems that we saw, right? And what I'm going to do is there's this PS Arun scan. This is just going to look for signals. What I'm going to do is I'm going to say, okay, let's find signals. We're going to go out and do prospecting, right? And because of the amount of data and the fact that they've organized the list as well as we have, you're going to be able to scan just about anything that you want to. Like if you're watching from let's say Europe, for example, you want to do London. Click into Europe, go down to London, select. You can scan the whole market with a couple clicks. If you're in Asia, like maybe you're in Singapore, Hong Kong, get a lot of customers in Australia, in India. You're going to have the data available. You're going to be able to test it. You're going to be able to scan for it. Here in the US, I used to, what I would do is I'd come into Equities North America. And what I would do is I'd just scan every single optional stock. And I'd say, okay, show me all the optional stocks that have this signal that I'm looking for, right? And you can do that. I just hit start scan. What I actually like to do more myself personally is instead of looking at that list, you can also do ETFs in there. You can do Forex, futures, whatever it is you want. What I've been doing lately is I like to scan just the Dow Industrials, the S&P 500. Let's go ahead, and the NASDAQ 100. So I want to just find opportunities on those three lists. It's about 628 stocks or so, because there's some overlap, right? So I'll go ahead and start the exploration. Here, it's going to run through all of those 529. I was off on that number a little bit by 100, only 20%. It's going to go through those 529 stocks. It's going to reject 90+% of them. And I can now just look at the ones that are actionable right now, that have a signal right now. What I can say to MetaStock is, the stuff that doesn't have an opportunity, I don't want to look at that. I don't want to scan through 3,000 stocks or these 500 stocks individually to find an opportunity. Just show me that the ones that have either a long opportunity, none of these do, or short opportunity. Interesting enough, I've just noticed Carnival, Royal Caribbean, McDonald's, all of these have short opportunities. But look, if I'm only looking at longs, I don't have to do anything else today. If I'm just looking for shorts, here's my 7 stocks. Go pick the 2 or 3 that I like and maybe take a trade on those. That's how I can fit a workflow of looking at every single, or looking at the market and trading, and manage having a full-time job at the same time and be able to kind of work that in. The scanning is awesome. It really, what I remember showing this to a group of people at one of the summits that we do. And they're like, this is like the garbage collector. It takes out everything you're not interested in, just allows you to focus on what works. And I just love it. It does. It makes it so efficient. And that's what technology is designed to do, right? Okay. So let's wrap up here. Thank you for coming. As I said, my goal today was just to kind of get you interested enough in MetaStock to try it out. We are going to offer you an extended trial. But we do have 2 versions of MetaStock. We have MetaStock Real-Time, we have MetaStock. And that's what the RT stands for right there, MetaStock RT. And we have MetaStock DC. The difference, really, there's some core differences. MetaStock RT includes real-time data. It includes intraday data. It also includes a program that we didn't even open today called MetaStock Zenith, which is a very cool program where just Thomson Reuters, Refinitiv, they spent $1 billion developing it. And it's supported by something like 2,000 full-time reporters in 200 different news bureaus. Like it's a very, very legitimate, it's what your hedge funds are using. It's what your mutual funds are using. It's what your banks and brokers are using to make informed decisions. It's some of the best news. Now, I'm totally biased, but it's some of the best news available. And we didn't even look at that today, right? Some of the best information, some of the best data available. That's $250 per month for both MetaStock and that data package. If you are a hedge fund, you're going to pay way more than that just to even get the data. Okay, so that'll include MetaStock, it'll include MetaStock Zenith, and it'll include the real-time data package. Now, there are some exchange fees that it doesn't include. Like if you wanted to get real-time data from New York Stock Exchange, they want to, New York Stock Exchange wants a $3.50 fee. I believe that's the correct amount. Forgive me if it's not, but they want a little bit of a fee, and that doesn't include that price or any of those fees for any of the exchanges you want real time. If you don't pay that fee, you'll still get data, but it'll be a delay of 15 minutes, okay? So that's our real-time option. The other option that we have is our DC, daily charts option. It doesn't include the news and the $1 billion news package, but it does allow you to do everything I showed you today with daily data, weekly data, monthly data, et cetera, anything above a day. It's also been the one that's been rated #1 29 times straight, and it's only $69 per month. Okay, so that'll include MetaStock. It'll include our end-of-day data feed that we call Data Link, and it'll include whatever region that you might be interested, whether that's like North America, Asia, Europe, Middle East. It'll include the data that you need. We'll ask you what data that you need to kind of help you get set up. So the offer that we're going to do for that, for the software, again, has been rated #1 29 times in a row. And so if you pay for the first month, we'll give you the second and the third month for free. Which means, like, if you're doing real time for less than $100 a month, you can try it for that 3 months. $250 will get you going for 2 months, or for 3 months. Sorry. If you're not happy with it, that's all you're out. If you do the DC options, it's $69 per month, and that'll cover you for 3 months. Less than $30 a month will allow you to try for 3 months the software that's been rated #1 in its price category for 29 years in a row. Like, that's a crazy amount of time, right? So with that, we also want to make sure you use it. Obviously, we want to keep you subscribed to MetaStock. It's part of our core business model. We love our customers, et cetera, et cetera, et cetera. So with that, we're going to include MetaStock 18, of course, data for the region of your choice. We have what we call a White Glove installation appointment. And with that, you're welcome to install the program on your own. But for sure, you want to do the White Glove service appointment, because what we'll do is we will actually set you up one-on-one with a 2-hour block where you can ask questions, where they can help you with the install, where they can show you any part of the tool that you want. Maybe it's testing or scanning. They can spend up to 2 hours with you to kind of just make sure you understand everything. We started doing that a couple of years ago. It's been very helpful because it's a toolbox we've been working for years and years and years. It's designed to make trading easier, but it's like any other tool. We can show you how to use it. If you use it to make trades, it's worth $250 a month or $59 a month. It should pay for itself. If it's helping you make better trading trading decisions, that's that word I'm looking for, it will pay for itself. And so with this here, you do have the ability to try it. We're also going to throw in an Unleash the Power MetaStock, which is normally $99. You'll get that for free. It's a home study course. It's all on the internet. There's a little PDF that comes with it that kind of just walk you through not only everything we talked about today, the system testing, the scanning, the other stuff that we don't talk about, like the forecaster. Remember I told you we had a patent on that tool. It was so cool, but we were going to talk about it. So it'll show you that. It also goes through some training on some of our favorite tools here at MetaStock. Really, really good training that's available. We include it for free. Again, we want you to try it, but we also want you to keep it. We want you to join. We have customers that have been with us for decades, just longer than I've been here. So it's a great product. You should try it. There's a reason it's been rated #1. To do this 3-month trial, give us a call at 800-882-3040. You can also chat online with any of our sales guys at metastock.com/saleschat. And you can also do that at metastock.com/3for1. So just taking a look at some questions. You're welcome, Bobby. Thank you for running the control room. If you guys have any questions for me, if you want to email me, you're more than welcome to. If there's something that you weren't sure about or missed your question, or you're watching this YouTube in a few months and you just want to reach out to me, my email address is jeffrey, Jeffrey.Gibby, Gibby, at metastock.com. And if you put that in the YouTube chat, I'll put it in the thing. Otherwise, like, our sales team is great. They will help you with any other questions, but you're always more than welcome to reach out to me. For those of you that watched and came, or if you're watching later, I want to say thanks. I hope you learned at least how MACD works, or some things out of the video, maybe how to look at a trading methodology. Take a look at MetaStock. Stay healthy, stay well, stay safe, stay happy. We'll see you at the next one.